Welcome to SCN. Today I'm doing the news in English. I hope that's fine. I got some requests to make more news in English. This will be my first one. Let's get into it. Business Insider. Goldman Sachs drops plans to open crypto trading desk. Goldman Sachs Group Inc. is halting its plans to open a cryptocurrency trading desk, Business Insider reports September 5, citing sources familiar with the matter. The bank's plans to create a crypto-focused unit by the end of June 2018 were originally reported by Bloomberg, with sources claiming that Goldman Sachs aims to become the first large Wall Street firm to make markets in cryptocurrencies. Now, Business Insider reports citing unnamed sources that the bank has lowered the priority of this project as the regulatory environment in the crypto industry remains unclear. It might take many steps before a regulated bank could trade digital assets, most of them outside Goldman Sachs' control, sources reportedly reveal. Quote, at this time we have not reached a conclusion on the scope of our digital asset offering, Goldman Sachs spokesperson Michael Duvalli told Reuters. However, the bank is not going to fully reject crypto trading. As Business Insider's sources claim, Goldman Sachs is about to focus on a custody product for crypto, which will allow it to hold cryptocurrency on behalf of large clients and track its price. Back in May, Goldman Sachs executive Rana Jared stated that the bank had concluded Bitcoin is not a fraud, as the company officially revealed its plans to buy and sell cryptocurrencies. Nevertheless, the company's top officials remained skeptical about digital assets. Goldman Sachs CEO Lloyd Blankfein once said Bitcoin trading was not for him, but clarified that he is open to considering it if the cryptocurrency becomes, quote, more established. Well, that was not a shocker. And then we go to the next news that is actually connected to this one, some people say. This AI tracked unusual market behavior before today's big crypto drop. Earlier today, news spread that Goldman Sachs was sidelining plans of opening its cryptocurrency trading desk, a report coinciding with a market that took a sharp downward turn. The other day, market analysts saw someone take a 10,000 Bitcoin short position, while overall market sentiment has been positive. Top analysts have been questioning why someone would take a 74 million short position so quickly. It didn't make sense unless he knew something that they didn't. Only a few days after he started shorting, there is some bearish news that comes out. Others speculate that it could have been someone at Goldman Sachs themselves who took a 74 million short position, waited for 2 days, then announced that they're pulling out of crypto. These speculations have been just that, speculation. But with new AI technology keeping a watchful eye on the cryptocurrency market, there is evidence that points to a deliberate market manipulation, though by whom is still up for debate. And CCN just got the scoop directly from the data source. So what happened now? When the crypto drop occurred in the morning for quite some time, traders were looking for news behind such unusual minus 10% move across the board. Bitcoin, Ether, Litecoin, and other tokens all declined on a substantial volume. Later in the day, the catalyst was found. Goldman decided to pause developments on its rumored crypto trading desk. Many comments around this news were regarding potential insider trading and the fact that institutional buyers would like to get into the crypto space at a lower level, thus manipulating the markets. Data scientists and market analysts from the Ronin Al team, an AI-based crypto signals platform, took a closer look into the situation to see any red flags activities surrounding the drop. A number of indicators were pointing to some unusual behavior right before a drop. One of them is the social sentiment that sporadically increased minutes before the actual drop took place. The 3-day chart below indicates that such volatility in social sentiment takes place often, and each time it happens, AI algorithms react to it. Here you can see the picture. This chart doesn't indicate bullish or bearish, rather a sudden influx of activity that is not authentic. To zoom in, let's look into the last couple of hours preceding the event. It is very clear how social sentiment spiked above the 3 standard deviations from its mean levels. Historical data indicates these spikes are not typically naturally occurring events. 3 standard deviations event occur in about 0.3% of cases, and every time it happens, the Ronin AI team studied the event to analyze potential markets effects. In a morning drop, the break above the 3 standard deviation took place about 10 to 15 minutes right before crypto declined to spur more questions as to whether such an event was in fact a market manipulation or not. The timing in addition to the unnaturalness of such a spike is strong indications. Data scientists strongly believe this was either market manipulation or insider trading, but are reluctant to give a definite answer for obvious reasons. Regardless, the good news for the bulls is that whoever is shorting 10k Bitcoin has to buy back at some point, and it will likely push the price up significantly. The bad news is, when do they start closing the short positions and buying back? There's no real way to predict how this event will affect the market in the short and the long term. Well, it's no news that you have certain people that manipulate the market. That's how it is. There's nothing regular people can do about it. But it doesn't feel nice. Next news, the last one. Brian Kelly, ICO'S here to stay, but days of a white paper and a dream are over. In a recent interview with Cointelegraph, Brian Kelly, the founder and CEO of digital currency investment firm BKCM LLC, said that ICO'S are around to stay, but with some changes. Kelly, who is also a crypto analyst and regular contributor to CNBC, sat down with Cointelegraph to discuss various aspects of the crypto industry. Kelly stated that he sees blockchain and cryptocurrencies as early-stage technology, saying as example that Amazon founder Jeff Bezos probably could not imagine his online bookstore turning into a major video streaming platform. He added, quote, "We have a new technology that disintermediates a lot of industries. That's important, and that's going to be something that's here for the rest of my career at least, and likely a lot longer than that." Speaking on whether ICO'S as a form of fundraising will end soon, Kelly suggested that, quote, "It will stay but with a lot of change." He said that ICO'S proved to be an effective tool for funding projects using cryptocurrencies and blockchain technology. However, he added, quote, "The days of a white paper and a dream and 30 million are probably over." Kelly said that when choosing which digital currencies to invest in, there is a combination of positive indicators, such as activities that will increase the network, as well as catalysts like conference and potential software updates. Last month, Thomas Seb, CEO of a securities service as Switzerland's top stock exchange SIX, also said that ICO'S are here to stay. Seb predicted that the mass adoption would come in around 5 years. The ICO market has seen positive growth this year, more than doubling since 2017, according to ICO Ratings' ICO market report for the second quarter of 2018. Per the report, in Q2 2018, 827 projects raised over $8 billion in funding, compared to $3.3 billion in Q1 2018, representing a 151% increase. The reports note a, quote, "continued decline in the number of retail investors, while institutional capital in ICO markets has increased." ICOs. Well, ICOs, I have a video about that on my other channel. ICOs, I think they're good. That gives projects the chance to get out there and start their thing, but you also have these ICOs that unfortunately make that entire thing untrustworthy, because you have so many people saying that they're gonna start this and start that, and then people invest in it and then it turns out to be a scam. But I don't think it's the end of the ICOs. I really think this will, if they can do it more effectively, and have some kind of, something that says this is how you should do it. I'm not saying stating this is how you have to do it, but this is how you should do it. More people will be more careful when investing also. Well, thank you for this time. I will be back soon. Hope you liked the news for today. If you like the content, please like, share, and subscribe. And I will come back soon with some new news. Thank you, everybody. Hej då!